A lot really. I'm pretty much in the don't care camp as well. I try to pay as much attention to this, as little attention to the Fed as I possibly can. The fact is interest rates aren't going to go up very far, if at all, anytime soon. In fact, I think we'll have low interest rates potentially for the next decade or more. Interestingly, I think it's something Australian investors should be thinking about too with their portfolios. The RBA reduced its interest rate here, which was unexpected, but I've been saying for a year or two now that we're on our way to zero interest rates here as well. So I think this is a global phenomenon that's going to be with us for a long time.
You know what, you may be right, Nathan. However, it's still, you know, it's going to depend on where you place your trades, right, on what you think is happening, whether you or not you think that the Fed should not move for some time. It is entirely possible after reading those minutes that they will.
For us, we're very much value investors, so we're just trying to buy good businesses that are undervalued, and whether interest rates move up 1/4 or 0.5% doesn't matter too much. The one exposure I would say where there is some impact though is we do own a few banks. The main ones we like though tend to be in the UK, Lloyd's, where we've got much bigger dividend yields than you've got in the US. Lloyd's is potentially trading on a 8% dividend yield in the next year or two. In a zero interest rate environment, I just don't see how investors are going to leave the stock price sitting where it is at that sort of yield. In the US, those yields are much smaller. The world is becoming much more sensitive to interest rates, no question about that, just because of the sheer amount of debt that's out there. But as investors, we're really just focused on buying undervalued businesses, and I guess anything that creates a bit of volatility in the market is something we'll take.
When it comes to something like Lloyd's, Nathan, what about the potential for a Brexit?
Yeah, I think that's a real possibility. I mean, the bettors have got this at the moment. It's not going to happen. My guess is it doesn't happen. There's calls that there would be a recession in the UK if it happens. I don't think anyone really knows what the true outcome would be. Obviously, it would be bad news. But the main thing that investors in Lloyd's are worried about is an end to the payment protection insurance provisions, which are about £15 billion so far. There's probably another 2 years where people can make claims. But when that goes away, you're going to have an absolute massive increase in the amount of cash that can get paid out as dividends, and that's going to be far, far more important than Brexit.